This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil futures fell on Friday, declining more than 7% on the week after data showed China's economic growth slowed and investors digested a mixed Middle East outlook. Brent crude futures fell $1.39, or 1.87%, to $73.06 a barrel. U.S. West Texas Intermediate crude settled at $69.22 a barrel, down $1.45 or 2.05%. Brent settled more than 7% lower this week, while WTI lost around 8%, marking their biggest weekly declines since September 2, when OPEC and the International Energy Agency cut their forecasts for global oil demand in 2024 and 2025. In China, the world's top oil importer, the economy grew at the slowest pace since early 2023 in the third quarter, though September consumption and industrial output beat forecasts.
Russia's oil and gas revenue in October is set to jump to 1.17 trillion rubles, $12.16 billion, up 52% from September thanks to the once-a-quarter payment of oil profit-based tax, Reuters calculations showed on Tuesday. At the same time, the revenue is likely to have declined this month by 28% from October 2023 because oil prices fell, the ruble strengthened and so-called damper subsidies to refineries were nullified a year ago due to high fuel prices. Oil and gas revenue has been the most important source of cash for the Kremlin, accounting for about a third to a half of total federal budget proceeds over the past decade.
Moving on to the top news in the energy sector.
Analysts expect EU carbon permit prices will soar by 2027 as policy measures shrink supply, while their forecasts for 2025 and 2026 were little changed, a quarterly Reuters survey showed on Friday. The EU's emissions trading system is Europe's main tool for curbing emissions to meet its climate targets and forces manufacturers, power companies and airlines to pay for the carbon dioxide they emit by surrendering carbon allowances. The average analyst carbon price forecast for 2027, the first time participants in the survey have been asked about the period, was €111.14 a tonne, much higher than the current €62.50 tonne price.
China's diesel exports fell in September to the lowest level since June 2023 on weak margins and limited export quotas, customs data showed on Friday. Diesel exports last month totaled 350,000 metric tons, 2.61 million barrels, down 70.9% from a year earlier, according to the General Administration of Customs. That was also sharply down from 880,000 tons in August. The weakness was due to tight clean fuel export quotas, plus refiners prioritized jet fuel exports over diesel, and weak export margins, said Emma Lee, senior China oil analyst for Vortexa. Next, we have the top news in metal markets. China's September aluminium output rose from a year earlier, official data showed on Friday, thanks to firm demand and profitable margins for producers of the light metal. The world's biggest aluminium producer churned out 3.65 million metric tons of primary aluminium last month, 1.2% higher year-on-year, data from the National Bureau of Statistics showed on Friday. Daily output in September averaged 121,667 tons, higher than the average of 120,322 tons in August, based on Reuters calculation.
Indonesia aims to manage nickel ore supply and demand to support prices, its mining minister said on Friday, amid reports of delays in the quota approval process forcing some smelters to import ores from the Philippines. Indonesia, a major producer of nickel ore, has from this year changed the validity of its mining quota document, known as RKAB, to 3 years from 1 year, although it will determine mining volumes for each year. The state must be present to maintain supply and demand. If the supply is ample while demand is low, the price will drop, Mining Minister Bahlil Lahadalia told reporters on Friday.
We will now look at the top news in the agricultural sector.
European wheat futures fell on Friday, pressured by a slide in Chicago and easing concerns about Russian supply, traders said. December wheat on Paris-based Euronext settled 1.6% lower at €226.50, $246.09, a metric ton, putting the contract down 1% over the week. CBOT wheat fell about 3% to a new 3-week low. The return of rain to parched Russian winter wheat belts this week and limited immediate impact on export markets from Russian government steps to regulate prices have tempered supply worries.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.